Three big banks are going to start reporting earnings this week on Thursday before the opening bell. So, which one's the best pick? Welcome to Trading Nation. I'm Dominic Chu, joined by Craig Johnson, also Dennis Davitt. So, let's talk about big bank season because it unofficially kicks off the earnings season. A Dow component in JP Morgan joining also with Citigroup and Wells Fargo reporting earnings season for the big banks. So, it's a dealer's choice kind of game, guys. Both of you gentlemen. JP Morgan, Citi, Wells Fargo, what's the best pick, long or short, and why? Dennis, we start with you first.
Okay, so I'll fall back on what I know and what we do at Harvest, and we look at volatility and what the options market's telling us is going on in these three big banks. So if you put me in a corner, the options market is saying that you should buy JP Morgan because the options are pricing the downside insurance in JP Morgan very low. I would be most concerned about Citigroup because Citigroup options are trading at a higher volatility. People are asking more money to sell you insurance on Citigroup. And Wells Fargo has been kind of leaking a lot of bad news lately, so that's a stock that I don't think is going anywhere. So I would sell puts and calls on Wells Fargo, take no position in the stock, own JP Morgan, and I would be really cautious about buying Citigroup based on what the options market's telling me.
All right, there's certainly an interesting insight there given what's happening with the derivatives side of things on those particular bank stocks. On the technical side, the charts, everything else, Craig, you're our expert here. What are the bank stocks that are the best investments, best ideas, long or short? Take your pick. We've got three big ones reporting.
Yeah, thanks, Tom. I'm going to take the opposite here from what Dennis is thinking, but I got to point out that all three of these charts, they've all broken their 50-day moving averages. They're all off, 7% for Citigroup. You're off 10% for JP Morgan and Wells Fargo. From my perspective, I think that I'd rather buy, coming into the print here, I'd rather buy Citigroup. It's off the least amount. It's holding up better in terms of the charts than where you're at with Wells Fargo and JP Morgan. And I'd point out that a close above 61.50 would start a new leg higher for Citigroup. So that's the one I'm leaning on, and that's the one, if I had a choice of the three here ahead of the print, is I'd buy the Citigroup.
Are there places, Craig, in the marketplace for banks right now that have you worried the most from the chart perspective? We know that many bank indices have been to the downside right now and have been trending lower. What are you watching in particular to kind of to set the tone, if you will, for the rest of big bank earnings season?
Well, it's a terrific question, and across the board, for all the financials that we look at, we rank everything on a total return relative strength basis, and we have been noticing now for several months that narrowing in that 2 to 10 spread obviously is a headwind for the banks itself. The relative strength has been deteriorating over the financial sector over the last several months. And from our perspective, a lot of these names are just kind of coming back into areas of meaningful support. And those are the key things I'm watching: relative strength, that net interest margin spread, and the overall trend of the entire sector. I still think that it's just a correction in the context of a longer-term uptrend for the financial sector itself. And so again, I'm going to come back and lean on Citigroup as the one to buy ahead of this earnings release.
All right, so maybe buy on weakness there. Dennis, we're going to give the last word to you here. Financials are such an important part of the overall market, and we spend so much time on them because financials represent the second biggest sector in the S&P 500. They throw a lot of weight around. What will you be looking for as big bank earnings season progresses, either on the option side or generally as a trader?
What I'm looking for on the bank stocks is what are they going to be doing with the new paradigm? The big move that we saw up in the bank stocks, I still go back that people were wrong way going into the election. I know we're only 100 days into this new administration, or just barely, but how they're going to adjust. Are they going to be bringing back their compliance? The only area of growth at the banks over the last 4 to 5 years has been in compliance. If they refit their trading, and if they go back into areas where they can take risk and make money that way. I actually think if they take more risk, they'll make more money. I think if you roll regulations back, that will also help them make more money. And the thing that people are missing is inverted yield curves, or they're looking at interest rates. If the overall economy heats up, that will far outweigh a theoretical carry trade that the banks get to embrace. So how they're reacting, what are the conference calls going to be like, much more so than the earnings? How are they preparing going forward with the new regulatory environment?
All right, so no doubt a lot of traders on Wall Street and beyond looking towards what's going to happen on the regulation front. Of course, we know that President Trump and Congress have a good deal of work to do on that front, guys. Thank you so much for joining us on Trading Nation. Dennis Davitt, Harvest Volatility, also Craig Johnson at Piper Jaffray. And I'm Dominic Chu. Again, thanks for joining us here on Trading Nation. If you've missed anything, go to tradingnation.cnbc.com. Until next time, we'll see you then.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.